understandably, the job retention scheme, the furlough scheme, has attracted the majority of the publicity of all the government COVID schemes. But just recently opened up is the ability to apply for the second stage payment under the SEISS, the Self-Employed Income Support Scheme. So you can apply for that now. The conditions for applying are largely the same, but with one extra addition, as they were for the first tranche. Don't underestimate how important it is, I think, to have the knowledge of how this scheme works, because there's a wide community of people who are claiming. So far, under the first stage, 2.7 million people claimed under the SEISS, and the government, as a result, paid out £7.8 billion. Second stage isn't going to be that different, although the payments will be a little lower. The payments are going to be made, as before, as a single sum, a single lump sum, which will be taxable and pensionable. So the conditions for applying, just to remind you, you'll need to have submitted a tax return. So I think it's important to know about this for your self-employed clients, and maybe even yourself, hopefully not yourself, but for your self-employed clients, having an awareness of how the scheme works is important, even though you're not going to be doing the claiming on their behalf. They have to claim themselves. Okay, so they need to have submitted a tax return for the 2018-19 tax year. Okay, they needed to have been trading in that year, obviously. They need to be trading, to have been trading in the 2019-20 tax year, and to be trading in the 2021 tax year, unless so adversely affected at the time of claim they couldn't be claiming. And that's a point I'll come to in a minute. It's a very important point, actually. They need to have had profits either in the 2018-19 tax year or for the average of the 3 years leading up to and including that year of less than £50,000, and in whatever period they choose, that 2018-19 year or the average period, their self-employed profits need to have represented at least 50% of their total income. So hopefully more than that. So that other point, that conditional point, is they must prove, you must be able to prove, if asked, that your business was adversely affected by COVID-19. Now, you self-certify that. At the point of claiming, your business must have been adversely affected by COVID. So at that point, you will say it has been, and you make the claim. But you need to, and this is really important, a point to make to your clients, you need to encourage them to keep records so that if asked, and we should work on the premise that everyone will be asked, they probably won't, but you need to plan on the basis that everyone will be. So you should have records to prove that your business has been adversely affected. How do you do that? Well, in most cases, it will be a financial piece of financial evidence. You can prove that your profits have gone down, your revenue has gone down. Important, I think, to keep, because this is, you only need to prove it at the point of claim. If your business subsequently recovers, they don't take the money back. So it's the point of claim, has your business been adversely affected? And it could have been adversely affected because you've had less customers, you've done less business, your business had to close, you as the proprietor couldn't come in, your staff have had to isolate, or you've had to isolate, all of which will probably flow through to reduce revenue and reduce profits. You may have had more costs because of COVID, adapting your business. All of that could have an impact on profit, but keep the records. And if you can, obviously keep management accounts that are accurate and show that reduction in profit, because that reduction in profit, that reduction in revenue is going to be the important thing if proof is needed, with the background proof as to why that happened. So how much can you claim? Well, the claim is now it's 70% of your average profits in the period between the 3 years leading up to 2018-19. So 2018-19, 2017-18, I always get this wrong, 2016-17, the average profit for that period. So then you need to look at the average monthly profit for that period and multiply it by 3, because you're entitled to a claim equal to 3 months worth of that average profit. So look at the profit for the average profit for the period, see what the average monthly profit is, and then you can claim up to 3 times that, subject to a maximum of, 70% of that average. So it's do the average, okay, for the period, divide it by 12, find what the monthly average is. 70% of that times 3 is what you can claim, subject to a maximum of £6,570. Okay, so that's how much you can claim. Is it taxable? Yes, it is. Is it pensionable? Yes, it is. Can you get more detail on this? Yes, you can. Where'd you get it from? Techlink. Our matrix has been kept totally up to date in the whatever it takes section. And also our bulletins will keep you up to date with how to claim under this scheme and what the rules are, with linkage to all of the main revenue sites.